Thank you very much again, Marcel. Yeah, I think we talked around the digital euro a little in like my presentation and Martin Dier's presentation as well. And I think now it's an important topic to discuss, like design on the digital euro, because this is also a question the ECB and other institutions currently ask themselves about this topic. Yeah, but before we go into it, I will ask you basically to very briefly introduce yourself, so you can use the microphones here, and please be very brief because we just have 20 minutes, and of course want to talk as much as possible about the content. So maybe I ask you and Thomas to start with a quick introduction.
Thomas Meyer, presently working in asset management, previously chief economist of Deutsche Bank.
That was quick, thank you.
Not sure if I can beat that. Alexander Bechtel, I'm head of digital asset and currency strategy at Deutsche Bank and have a background in monetary theory and economics.
And I'm Joachim Schwerin of DG Grow in the European Commission. I'm responsible for the digital transformation of industry and working also on the digital euro.
Okay, wow, so this was very, very quick. Thank you for that. And last but not least, Max, maybe you also can briefly introduce yourself.
Yes, thanks a lot for being here. Maximilian Foster, co-founder of Cash and Ledger. You bring the industrial perspective to the discussion around the digital euro.
Perfect. Thank you very much, Max. And yeah, I would like to start with the first question actually to you, Joachim, because yeah, the question is where do we currently stand about the digital euro, and why is the question of designing a digital euro currently very important?
It has been an important question for a long time, and I think we are a very important and critical phase at the moment. You know that at the European level we have been working on blockchain for a decade now. We declared in 2016 that it is an absolute innovation priority in all areas of policy making in Europe for the next decade. We have a track record on fintech, blockchain development, tokenization. Example is the MiCA regulation, I think, which is a very innovative piece of regulation. I'm not referring to other little setbacks like unhosted wallets, etc. We have other opportunities to discuss that, but in general, we have a very pro-innovation stance at the European Commission. We have already, when we said that blockchain is an innovation priority, declared very clearly a long time ago that cryptocurrencies are nice, digital assets are nice, but the benefits must be for the real economy. And that is where we see the use cases. We see the use cases for industrial ecosystems, we see the use cases for SMEs, we obviously see the use cases for citizens. And I think that must be a use case-driven discussion that we are taking. At the moment in the European Commission, we have been following that discussion. We feel that there is an urgent need to step up discussions on the digital euros. In fact, we have a discussion on the digital euro as such, but as you explained, we have various digital euros, or in fact programmable euro that we want. And we have set up a group in the European Commission where indeed the timeline you have already referred to in the previous two presentations. For the time being, we have a technical discussion going on. We launched a public consultation, a targeted consultation yesterday, and I would invite you all to get involved in this, focusing on three areas. One area is the international dimension. And this goes a little bit back to what we do on trade policy, what we do on competitiveness policy, but also on our remit, and I want to be very clear on our remit. That's Article 133 of the TFEU, and we at European level, it's the Council and the Parliament on the suggestion that the Commission will make is responsible for the conditions of a digital euro. And of course, the European Central Bank will be heard. It has an important technical role to play, but the treaty says that it is us that makes the proposal. And in my opinion, the design features also include the question of whether it's retail, whether it's programmable, what it is in detail. That is why this consultation is important. That is why the impact assessment that we've currently started is very important. And I must say that over the last year, I've seen with very great pleasure that it's not only those parts of the European Commission that have always been extremely pro-innovation, but in fact all people that now understand the digital euro much better, that very clearly see the features of a programmable euro as a big advantage for you. And we will see where that leads to. I mean, we need to take into account, obviously, that we have a big legacy system that exists. We cannot start completely from scratch. We have to see where we get to step by step. But it is very clear that the applications, especially for the machine-to-machine economy, the issue of programmability, the questions of also how is the cybersecurity of such a project to be designed, etc., are key features that we look into, and this is much broader than, I would say, the discussion that is currently being reported.
Yeah. So you referred to some of the first design dimensions, right? So security as being important and programmability as being like one potential part of it. And maybe asking you, Mr. Meyer, next, like if you could like design a digital euro, what would you think are key design elements a digital euro should have?
I think the first question you need to ask is, what do you want to design? What is it? What kind of thing is it that you want to design? I liked your chart very much in your presentation, where you showed several hundred years of reserve currencies. When you go through this chart, you will see that these are mostly currencies which were asset-based. Since 1971, we have a currency system which I call a fiat credit system, i.e. not an asset-based system. And the question is, how stable, how durable is this system? I think this is the question you need to ask before you think about technical designs. Now, digital euro. I think the euro, before we talk the digital euro, the euro has two problems. Problem number one, it is incomplete. It is a cash union that we have. The deposits, which we usually use to make payments, the cash payments are only a small segment of it. The bank deposits are of different credit quality in each country, depending on the banking system there and the country's ability to rescue the banking system if there is a systemic crisis. EDIS, European Deposit Insurance, is something that people wish for, but which is not within reach. So we are dealing with an incomplete currency. Second, the euro, like probably other fiat credit currencies, are in trouble. We are presently running an inflation rate in the Eurozone of 7.5%. And it is quite possible, when you look at it, that we will see a double-digit rate of inflation in the course of this year, especially now after the sanctions of the Ukraine war. In other words, we have a stagflationary shock presently of the system, like we had it in the 70s. At the end of the 70s, in the early 80s, we had a complete overhaul of the system. It was re-anchored, then by Paul Volcker, chairman of the Federal Reserve, and it started afresh, and we had a period of low inflation. I think this period will be very, very difficult to stabilize, because I come now back again onto the euro, because I think the ECB is under fiscal dominance. It cannot stop the inflation wave in which we are presently engaged with the same brutal force which Volcker stopped stagflation in the 1970s. That's the situation. Fortunately, digitization offers a chance to reform of the system. And this is why I have, over the last couple of years, gone around and discussed the idea of basically creating a digital stable coin, the euro as a digital stable coin. Now, with that, I have to say I'm using two tricks in my thought model. The one trick is, of course, CBDC, and the other trick is the Chicago Plan of 1933, which eminent economists back then proposed to the Roosevelt administration to stabilize the financial system after the stock market crash of 1929 and in the depression of 1933. So the essence is, borrowing from these two ideas, the essence is that you have the ECB issue a digital euro backed by government debt on its balance sheet. It already has a huge amount of government debt on its balance sheet. It could buy more. You would say, this guy is crazy. I mean, I'm a kind of conservative, liberal economist, but they could buy more. They could buy so much more that the assets on the balance sheet of the ECB fully cover the digital euro on the liability side. And then you have the 100% money system that Irving Fisher proposed and others proposed in 1933. What would be the advantage of this extraordinary, I would say probably utopian idea? The advantage would be twofold. One, you would complete EMU. You would have a payment a means of payment of the same credit quality in all the euro countries, transferable not hand to hand as we have presently the paper notes, but transferable electronically at every distance. Number one. Number two, and this was the trick of the Chicago plan, you take government debt and put it on the ECB's balance sheet as a permanent stock, cover stock for the stable coin of the euro. With this, you can reduce debt outstanding in the market by a substantial amount because it's fixed on the balance sheet. And when you do the calculation that I have done at numerous places, which you can find on the web, you can see that you can get the debt ratio of the euro area down from presently about 100% of GDP to something between 40 and 50% of GDP, well within the Maastricht limit. So we don't have a lot of time, so I stop here, but that's my proposal for the design of the digital euro. Thank you.
Thank you very much. I think what you said initially is really important to just know what, like if you ask a sign question, what the goal is, right? So what the use case is, what the aim is. But maybe also to you, Alex, because the question is about the design. What do you think are key design dimensions a digital euro in form of a CBDC should have?
Yeah, so that was very interesting. Thanks for that, and I would have a lot to discuss about that. But I will try to leave that aside. I think it's totally fair to say we have the digital euro now, and let's use this instance to kind of have a discussion about how our monetary system works and if we can kind of change that and make it more stable. But I will kind of push that aside now and talk about what you were asking about. How would I design a digital euro? And I think when thinking about should a digital euro be on a blockchain? Should it be on an account-based system? Should it have an interest rate? Who should have access to it? I think all answers to these questions should be driven, and Joachim, you said it, by the use cases we have in mind for the digital euro. So what are we planning to use the digital euro for? And here I think it's very important to create something that actually creates an added value to the things we already have. So it makes no sense to create a digital euro which I can use as a checkout method at Amazon next to 5 or 6 methods I already have and that work perfectly well. So this is how I would approach it. And then it's really important to say, okay, we have this digital euro that comes from the central bank, which is a central bank digital currency. But there is also potentially a digital euro that comes from the private sector. And you mentioned stablecoin, for instance, Jonas. I think you forgot one important form of a digital euro, and I have to mention that. This would be a digital euro that is issued by banks, right? Which would be tokenized commercial bank money. And I think it's different from stablecoins. And when we look to our monetary system today, 90% of the outstanding money, M2, monetary aggregate, is commercial bank money. So most of the money we are using today is money issued by banks. And of course, it's very intuitive to say, why shouldn't we use this money that we're using already today and provide it as a means of payment in a blockchain ecosystem? So when we have understood that there's a central bank providing tokenized money and there's the banking system providing tokenized money, we always have to think about who should solve which issues, right? And there's the private sector can solve certain issues, and probably when it's about innovation, industry 4.0, machine-to-machine payment, these more complex stuff, it's maybe something that should be addressed by the private sector. And there are other things that are maybe better being addressed by the central bank. And this could be things like creating a very resilient payment system, offering features that are not being offered today by money, for instance, allowing digital offline payments, that's one thing, or for instance, allowing digital anonymous payments, so digital private payment, at least up to a certain threshold. Right? And so I always think about this whole like payments mix. We have a central bank, we have private banks, private institutions are better suited to address certain use cases, and the central bank is better suited to address other use cases.
Thanks, Alex. And I think this also brings is a good way to bring Max in, because you're also working on industrial use cases for your solution, right? So what use cases would you maybe also see for CBDC, so for the public sector, and which role would you see for the private sector, like companies like yours, for example, and banks, of course?
Yes, thanks a lot for the introduction, and I'm 100% with Alex. Maybe more radical in saying, like, ultimately, I don't really care whether it's a like CBDC or whether it's issued by a private commercial bank, then it's commercial bank money, basically, which has the function of programmability. But ultimately, you need programmability in order to basically evolve these new use cases. Why is that? The use cases or the industry becomes more complex. So the business models which we currently face, which we evolve to become more complex. So taking, for example, pay-per-use, it's an evolvement of current, sales cycles. It's an evolvement of the current economy as it is, because you turn it around. Ultimately, you transfer the traditional sales business to a monthly recurrent revenue stream. So you basically transform the initial mechanical engineering company into a kind of an Netflix model. And for that, you ultimately need a kind of a back layer, kind of like a foundational layer. And this is programmability of money, because money ultimately always goes hand in hand with the industrial applications. If you look at Amazon, for example, in the 90s, you have the same example. Like Amazon could only be as big as it is today because you have a simultaneous development of online banking. Only once you could also buy the shoes online, and they basically also have direct involvement in sending these shoes back to your home, you basically had a tremendous success. And the same is happening right now with IoT data. So you have tremendous amounts of IoT data, and none of the current use cases besides the new pay-per-use and these new complex business models are able to fetch this amount of data and transform that into new opportunities. And that's why you need programmability at all costs, and you need programmability in the current payment cycles. And you need it, whether it be public or private. Whereas I would also state that it could potentially be private because it's just a fast implementation, and commercial bank money just provides other opportunities. Could also be publicly from the public and from basically the institutions that the CBDC, a digital euro in its initial sense, can also have a programmability being involved. I don't want to judge it because we're coming from an industry perspective. I only want to stress the need that the programmability needs to be there.
Yeah, thank you, Max. I think the aspect of programmability is really interesting, and there are some central banks also out there, like the Brazilian one, that are actually looking into IoT payments as a use case for a CBDC, which I think is interesting, innovative, but it will be interesting to see how it will look like for the digital euro. What I would ask you, Joachim, as a next question, also regarding the design, is the question of privacy or anonymity, because what we've seen in a recent statement by the ECB that Fabio Panetta basically said it's also imaginable that you have a CBDC that there are really anonymous private payments until a specific threshold, and afterwards there is the similar privacy we have today, right, where you have to provide KYC. But what do you think about the dimension of privacy for CBDC or a digital euro in particular?
To me, it's one of the two most important points, and I'm saying here my private opinion, but in essence, I use personally cash a lot. I like the privacy. I think by default, everything should be private. And this is in line with actually our thinking on data, for example, at the European level. I mean, if you look at GDPR, if you look at our Data Act that is coming up, we put really privacy first when it comes to the governance of data. And this must be translated into the crypto space. And in my personal opinion, this more or less kills the use case as is currently in discussion. I mean, that is why it is important to work in parallel. I mean, I like this working on the digital euro discussion as it is now very politically highlighted. We need to see how far we get there, but we need to work as in every innovation process in parallel with industry, with stakeholders, with the users in the various ecosystems to see what are the practical problems and how it can be designed. And there the commercial banks play a big role. Industrial organizations play a very big role. I'm very grateful to some of the participants here. Cash on Ledger is a very active partner. Digital Euro Association, we have a group currently looking into a wholesale programmable euro and the features of that project called Tokenized Europe 2025, which is very ambitious. It's a private project which is supported by us. And there I think let's say the industry dimension is clear. But if you look at retail, I mean, at the end of the day, cash, you have a right to own cash, you have a right to use cash. It's in the European treaties. No one can do anything about that. And people use cash for very obvious reasons. And actually, it's not really a fundamental problem as such. It's the same discussion a little bit with the unhosted wallets, this general mistrust on use of solutions that are not centralized. It's the other way around. The whole thing that we are discussing here in the CIC since years in the crypto space and the blockchain space is decentralization. And it's a question how far decentralization goes, but it's very clear that decentralization by default includes privacy. And if there's a centralized solution that endangers that, it's a no-go from the first moment.
Can I make one comment on privacy? I mean, Jonas, you know, this is close to my heart. And for me, a retail CBDC at least is something that might replace cash sometime in the future. I mean, we see these tendencies already in Sweden today. I don't know where we are in 10 or 15 years in Europe. So in my opinion, it is of utmost importance that a digital euro, a retail CBDC, allows us to do fully anonymous payments. And when I mean fully anonymous, it's not that we are sharing our payments data with the ECB or the Bundesbank and they promise us to delete them after 2 weeks. It's privacy in the sense that we don't even share data with any central institution. And usually central banks are arguing that this is not possible because they have to adhere to AML regulation. And I strongly believe that this is not true. It is technically possible to allow fully anonymous payments in the sense of I'm not sharing any data with anyone while still complying with AML regulation. Because what you can do with, and Jonas and I have written a paper on that, what you can do is you can use a technology that's called zero knowledge proofs that allows you to prove to a central bank, I have done a payment that's below a threshold of, let's say, €1,000. And that's the only thing a central bank needs to know, because let's say the threshold, the official threshold is €1,000, and we agree that anything below €1,000 does not need any additional AML checks. The only thing a central bank needs to know that this is a valid payment that has been below €1,000. And we do not have to share any additional information with them. So whenever you read anywhere from a central bank, it's not possible to combine full anonymity and privacy. I would strongly doubt that, because I think it's technically feasible.
Great. So yeah, unfortunately, the time is really running and the 20 minutes are already up. So I would love to discuss probably hours with you. So we really could just tackle the top of it, but would love to continue the discussion outside. So thank you very much for your opinions, for being here. And yeah, also thank you very much for listening. And now I'm handing over again to Marcel for the next lineup. Thank you.